Hello and welcome, I'm Cody Koch. This video is part of my question and answer series in which people ask me questions and I give them answers. Let's get to it. Cody, why do you prefer to invest in buying private businesses compared to other asset classes? So this person's referring to some things I've talked about on my YouTube channel in which I have over many years successfully invested in a wide variety of asset classes, both invested and traded in. But my personal favorite method of investing is to go out and acquire strong, established businesses. I do want to say that I really like a lot of asset classes, and some of them work in certain environments. For example, publicly traded stocks are great, real estate's great, commodities are great, and so forth. What I like about business acquisitions is, one, it's a very broad industry. Now, in my experience compared to other asset classes, business acquisitions have higher returns with more growth potential at a comparable risk level. So, for example, higher returns. Small and medium-sized private businesses typically sell from 1 to 5 times EBITDA, or earnings before interest, taxes, depreciation, and amortization. Meanwhile, publicly traded stocks will often sell for anywhere from 8 to 15 times EBITDA. The fact that those private businesses sell at lower multiples means we can go out and acquire them and make a higher rate of return from the very beginning. Typically, private, small, and medium-sized businesses, again, they're very small, have a lot of room for growth. They have a lot of maneuvering room that can allow them to become quite large. And as for comparable risk, if done right and managed correctly, proper position sizing, proper risk management, private business acquisitions are just as risky in my experience as many other asset classes. For example, the stock market. Even if you have a highly diversified portfolio of publicly traded stocks, approximately every 7 to 10 years, the stock market will be down approximately 50% or more at some point. Real estate, on the other hand, can be kind of risky. For example, if interest rates go back to what they were like in 1980, 20% or so, the real estate market back then completely collapsed. Stuff like that can happen, and it's for those reasons I think business acquisitions have comparable risk. Another benefit of business acquisitions is it gives a wide variety of industries which can be highly uncorrelated to one another. By looking into this and buying businesses at a variety of industries can dramatically improve overall stability, smoothness, and lowers risks simply by being diversified in different industries. Businesses also allow for a lot of flexibility in capital management as well as tax benefits, and profits from a business acquisition come in the both form of cash flow that's regularly coming in, rather large amounts of cash flow, as well as appreciation in the value of the business. So please hit that like and subscribe button if this video was helpful, and I thank you for watching.